So you guys are the new kids on the block, the latest REIT to file, IPO last week, I think it was. So tell us a little bit about the reasoning. Why is now the right time for an IPO, and what does it do for your strategy?
We listed on May 18th on the New York Stock Exchange. Our company really has been around for 15 years in various formats. And over that period of time, we've developed a number of funds in a particular segment of the industry, the upscale segment. As we approach the end of these funds and as they begin to mature, we look at various liquidity options for those funds. Initial fundraising is done in a non-traded illiquid security. And as we looked at the various options and looked at our portfolio and the upside that continued to exist in that portfolio and in the markets more broadly speaking, we felt listing was the best alternative for us to pursue for our shareholders.
And does that change your strategy? You guys have been historically acquirers, in some cases acquirers of portfolios or single assets. I mean, how does that change your strategy for growth being a public company, publicly traded company?
As a publicly traded company, we'll have access to different capital sources, and we have a stock price that will move up and down with the market, more broadly speaking, and based on the performance of our individual company. We'll look at a variety of factors to determine the right time to invest and to raise additional funds in the public markets. But broadly speaking, our strategy of investment will be consistent with what we've done historically, and that's a focus on the upscale segment, more broadly known as select service or extended stay.
And you partner with operators that specialize in extended stay or whatever niche your particular growth is at that stage. What do you look for in partners operation-wise?
So currently we have, in Apple Hospitality REIT, we have 17 different operators. And they're a mix of national operators and regional operators, and each of the companies have different expertise in different areas. We're fortunate in that we can benchmark their performance, and as we look at new opportunities to acquire assets unencumbered by management, we tried successfully, I think, to pair our management companies with those assets where they can best perform.
You have over 170 hotels, 22,000 plus rooms in your portfolio, all of them that fall under Marriott or Hilton umbrella. What is it about those family of brands that appeals to you?
What attracted us to those particular brand families, and more specifically to the brands within those larger brand families that we've chosen to focus on, is the breadth of consumer recognition, the strength of their reservation systems, and the support that the brand family brings in terms of guest loyalty programs, brand standards, and things of the sort, which in total, in their entirety, create a compelling offering which drives guests to our hotels.
Do you ever see any opportunity to go outside that window, or are you?
We're continuing. We're always looking at other brands, competitors to the brands that we currently operate with.
And do you have a war chest of cash funds to buy hotels? Are you allowed to say what that is, being a public company now?
So we're fortunate. Another piece of our low risk strategy is to have little debt. And so we come to market with the strongest balance sheet in the industry at 1.8 times debt to EBITDA. That allows us a tremendous amount of flexibility to pursue options that are accretive to our shareholders. We have right now, in terms of capacity on our line of credit, well over $700 million worth of capacity without seeking other sources of financing. And we'll use that either to grow our portfolio or to buy our stock, depending on which option provides the greatest benefit to our shareholders.